station of TFNN. The Tom O'Brien Show is produced every business day after the market close. Tom takes your phone calls from 4 to 6 p.m. Eastern Standard Time using the data available at that time.
Let's go to Marty in Worcester. Hey, Marty, what's going on?
Hi, Mr. O'Brien. How are you, sir?
I'm doing great, man. How you been?
Oh, can't really complain. First of all, I wanted to thank you for the bargain re-up on the gold report. I've been getting it for quite a while, and for a couple years there, it was like an insurance policy. I'd say, oh, I got to buy gold, and the gold report would say, oh, no, not yet. And lately, it's like a winning lottery ticket. So it's working really well all around.
I appreciate the feedback, Marty. Thank you.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 9 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone had a great day, safe day. Let's make it a great night, folks. Let's take a look at one of our quotes. Hope costs nothing. That was by Colette. Market-wise, let's take a look at it out here. We had the Dow Industrials up 20, NASDAQ up 35, S&P's up 7.5, gold contract flat at $1,293 an ounce. Silver up 3 cents at $19.36 an ounce. Platinum flat at $1,467 an ounce. Copper $3.17 a pound. Light sweet crude up 61 cents, trading at 102.63 a barrel. Bonds, we had the 10-year off 3 ticks at 125.22. The 30-year down 18 at 136.26. King dollar down 42 ticks at 80.06. The euro up 16 at 137, and the yen at 101.41. Our phone number is 877-927-6648. It was called, folks. Want to know what's going on in your world? In the world of the S&P, let's take a look at them. What do you have? Okay, we are at 1885.75. The high of the downdraft that was created last Wednesday is 1888.16. Now, what we had on Friday is this, folks. Okay, so Thursday, the downdraft, we get to 1826.26 on the S&P. You got back inside the lower range. You had an expansion of volume. That sets up that it wants to go down to the 1814, which is the April 11th swing point. Wants to trade down to the February 5th swing benchmark, which is 1737. Okay, so what happens on Friday? Friday, you actually had an expansion of volume, which sets up like, oh, we got an expansion of volume, 775. We had come down on 750. You start going up at 775. If you're a bear, this is exactly what you needed out here today. Why? Because we had a contraction of volume once again, 583 million, versus your downdraft out here of 750 million. If we go to the SPY and we set up this correlation, this is what you're going to see. The SPY today traded to 188.89. We closed at 188.74. You did volume of 58 million. Versus the downdraft of 154 million. Now, we closed at 188.74. If, in fact, it had closed 3 pennies lighter, it would have set up a failure. What that failure would have been is that what you have is that if we go back to, let's see, that would be Wednesday, yeah, to Monday, last Monday. Last Monday, you go topside on the S&P, and just watch how this shakes out. You had 89 million shares on the SPY. We had a top with 66 million. We came down the first day with 73. It was really sideways. And then that's when the next day it came down and got inside the range with 154 million. Your correlation is that you're even weaker getting up into this level. So we're at 188.74. You know, we'll see whether it can hang those into those 2 extra pennies. This could go into this 188.96. I don't see it hitting the high once again. And the reason being is that the weakness is dramatic, even in the context of how we approached the high on the 12th of May. We're going to take a look at the Dow Industrials. What do we have with the Dow Industrials? So Dow Industrials did about the same deal, up 20 bucks, not a huge amount. Dow has a lot longer to go to even get to the top of that range. That is 498. I mean, no, 632. And we're at 511. 16,000. I just getting rid of the 16,000. So we're at 511 right now. The high of the downdraft day was 662. I don't expect we're going to see that. Now, NASDAQ Composite. What do we have in the Composite? Composite up 35 bucks today. Still a dead cat bounce. Composite has no volume. In fact, didn't have volume on Friday either. That's where it was divergence here. And the divergence was that the S&P did have some juice behind it in correlation to the NYSE. There was juice there. There was not juice in the NASDAQ. There was not juice in the small caps. What we have here is this. NASDAQ Composite at $1.5 billion. That is going against some major, well, yeah, the last time that we got up last week, it only could get to 41.55. That's 25 bucks away from where we are. We'll see whether it can even get into that area once again. We are at, the low of that high is 21.28. If you take a look at the 3 Qs, the correlation inside the 3 Qs, this is what you have. Up 61 cents. You did 28 million shares. The 3 Qs are saying that, yeah, they're going to go after the swing point from last Wednesday, which was 88.61. And today we did 88.46. The correlation, how we're coming into that is pretty intense, meaning we only did 28 million shares going into 131 million. The Russell 2000. Okay, so first let's actually take a look at the Russell itself, the index. So what we have with the Russell is this. We're up 11 points today. The Russell had already done a 100% move of a move. The low in the Russell, February 5th, was 1082. So 1082. We go from 1082, make the high at 1212. We get back down to 1082. Now, we did that on 316 million shares versus 292. So on your daily, it's saying, hey, guess what? You're going to be back down there. We turn around and we put this on a weekly, and on a weekly basis, what you have is that last week we did, there she is. Last week we did 1.4. This is what the answer is. 1.446 billion versus 1.491. Okay, so you came into that with slightly lighter volume on the weekly, but you, in that context, you need about 10% lighter volume. So that's saying also on the small cap. Small cap's going to get retested. Now, we go back to the daily. We take a look at we use the IWM. And we take a look at the IWM and do that correlation. So on the IWM, your benchmark was 107.27. You did 60 million. We came down on Friday. We did 75 million. That's on your daily. On the weekly, we take a look at and put the weekly up here, and what you're going to see on the weekly is that last week we did 320 million. That was going into 315 million. That's also saying, guess what? We're going to be back down here. When we take a look at the daily correlation today, this is what you have. It's dying on the vine. You have 34 million shares up. You're going down with 65 million. We didn't make it to the top of that bar Wednesday, which is the 111.12. We made it to 111.04. So the small caps, again, are showing that they are the weak dogs. I love the small caps, the IWM in particular, to basically make it up to this 111.34 area. The small caps, folks, have released a huge amount of information last week, and this is what it was. You came into the swing point from the 5th of February. Monster volume. That's saying, guess what? It's going to get down there. I suspect it wants to break it. The small caps themselves look to me like they want to go down and trade into the June 2013 level. In that context, that is going to be intense, number one, because of the fact that the S&P hasn't broken down yet. So if you just want a correlation as to where, in fact, the S&P can go, at this point in time, you still have the swing point from April that wants to be tested and the swing point from February 5th that wants to be tested. And I expect will get tested. Why? Because it's very unusual when you get a small cap or one of the indices coming down there. And what we also have is the aspect of the NASDAQ almost made it down there, and the other indices don't. But the bigger deal is that the way that the small caps traded last week, it's saying that, guess what? The S&P wants to go to 1627, which is a monster move way down. You know, I suspect 3-4 months, it'll take, but we're in a downdraft. You stay right there, folks. We'll be coming right back. We ended out, finish up 20, NASDAQ up 35, S&P's up 7.5. We got gold at 1293, silver it's at 1937. We'll get it right back.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a free 2-week trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Tom takes your phone calls. Now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. You had Walmart down 40 cents, traded 76.61. J.P. Morgan up 52 at 53.83. We had Big Blue flat at 187. Let's go to Rick in Natick. Hey, Rick, what's going on?
Hey, Tom, how are you?
I'm doing great. You having a good day?
Beautiful day today.
Perfect. That's good. I'm glad you guys are getting some good weather. It's been fluctuating quite a bit up there.
Yeah, it's pretty good though.
Perfect.
Tom, listen, can Bank of America go to $10?
Yes. Yeah. The question was, folks, can BAC, Bank of America, go to $10? And the answer is yes. So let's see. Let's look at the setup. So we've just traded down from $18 to $14.67. You broke downtown in a huge way. That was when they had to pull back the dividend. That was on the 28th of April. So your A point on this one, a small ABC down. 18 was your A. The 15, it was a 250 A to B, which gives you a $14 setup. Now, we already hit $14.36. So that was your first A to B equals C to D. Didn't do the full price projection yet. I expect we're going to see it, though. Now, watch. When you put this on a weekly basis, what you have is that you have a weekly ABC structure down, same type of setup. The first get-go, I suspect that it is going to try to get into is, and it'll have some support, Rick, is going to be 1236. 1236 to 1123, basically, I suspect we'll build some cause there. But where you want to go, where I think this will go, it's 979. And where I'm going, it was the high of September 14th of 2012. That's how this thing is basically setting up right now. It's that week. That's how it's setting up. If you put this on a monthly, what you're going to see is that on a monthly basis, folks, you got up into and over the 1531 area, which was from 2011. Now, watch this. We had 4.6 billion shares traded. Well, we got over that with 2.5. It lasted for 2 months. You stayed over that level for 2 months. Then you came back inside it with 2.2. And once you're back inside that range, it creates a big problem, So, when I look at the monthly, the weekly I gave you was at 970. The monthly is $10.10. That's how it's set up. And if we get down there and you do have lighter volume, that's going to be a decent place to, wrap your head around it. Because more than likely what you'd have set up there is a consolidation. And that consolidation could stay on for quite a while on BAC. Meaning the bottom of the consolidation, very well could be the $10. If it gets into that $10, by the way, and it gets too deep into it, let's say it gets into it by like $1, and it's at $9 or $8.80, then don't touch it, because that means it would go all the way down to $7.66. Which, and in the context of BAC, folks, the thing that, this didn't have the volume at the highs, but this did come out of nowhere and gave up a lot of points very quickly, so. Good.
Well, do you have time for another one?
Sure.
PMCS.
Say that again?
P as in Paul, N as in Mary, C as in cat, S as in Sam. PMCS.
Yeah, I got it. Okay. Okay, yeah, PMC Sierra. They develop semiconductor networking solutions. The low is 560. The high is 785. Okay, so bring this back on a weekly. Okay.
Look at the long chart also and see.
Yeah, okay, so I'll bring it a 10-year monthly. Okay, so, wow, this is a trip. I know. It hasn't moved since 2006. Wow.
I know, but it's the same story as the MU or PMC. It's all the old tag that survived. It's coming to life, I guess.
Okay. So let's see. So I gotta bring this in closer so I can really take a look at this. Okay. So if we do it on a daily first. You're at 707. You had a couple different signs of strength. You had one sign of strength December 17th. That got it to 662 off of 582. You come in with another sign of strength. The 31st, you get the 660, and then you get another one to 725. I see, okay. So if you're looking to buy this, what we did is this, folks. We just came back from, what's that? 784 to 690. Last week we hit 665, 1.6 million versus that 4.8. I'd let it come back into that area again. If you're looking to buy this, it'd be like 660. It got down on Friday to 665. You did 1.6 million. And I'd almost make this do it on a weekly also versus just the daily, because what you don't have here, okay, is like any high volume at that 780 price point. So it's like, okay, you might get the rejection of lower price, but then, is it a dollar play? Is that it? And that wouldn't be worth it with the looks of this chart. Because this has been having some problems. Not problems, but it hasn't gone anywhere. That's what I come down to more than anything.
Very good.
Okay, man.
Thanks a lot, man.
Have a great one. Have a safe one. 877-927-6648. Let's go look at that gold market, folks. GCM4. So, gold out here. This is going to get really close, and this is what it is. If we take a look at the gold market today, you got to higher price. We couldn't hold price. We did 104,000 contracts. Now, what we have had, so if we go back to the downdraft that was created on the 15th of April, that's when gold went from 1307 down to 1293 in one day. No, 1328 to 1284 in one day. You did 189,000 contracts. What we have done, folks, is this, which is cool. We've had two separate runs, signs of strength, up into that price point. The first one we had was on the 24th. We got to 1299. You did 189,000 contracts. Nice start. Next one we had was on the 2nd of May, 172,000 contracts. Not bad. Then, well, actually, there's three of them. And there was one last week. What we did, we did 147,000 contracts. We got to 1307. Now, that being said and done, it's going to be like, okay, couldn't hold price today. We've been building cause to get into this area, meaning the downdraft area, since April 15th. This thing's got to move. I'd like to see another sign of strength like ASAP. The reason being is that what is happening is that the XAU and the HUI, XAU today held price. We got down to 88.63. We closed at 89.10. And that's really crucial, because if this thing breaks the 88.15, it could be big trouble. The HUI, same setup in the HUI. HUI got down to 217 today, 216.13. It held. If you're in the gold and silver market, you want these babies to hold up here, because we've had divergence in the market, meaning there's some stocks that are a lot stronger than others. But if that broke down, if those indices broke down, we'll get a very fast move to lower price. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll come right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Hecht's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We had the Dow finish up by 20. Excuse me. Nasdaq up 35. S&P's up 7.5. And, folks, as you are over to our website at TFNN, you're going to see right on the front energy opportunities during the summer of 2014. Our man, Mr. Andy Hecht, is going to be doing a hour-and-a-half workshop. It's going to be on the 7th of June from 9:30 to 11 o'clock in the morning. It's only $99. As you check this out at TFNN, if you sign up, well, when you sign up, you will get Andy's 7-page report right now as soon as you sign up. So when you sign up there for the workshop, he just did a 7-page report. And what that workshop, folks, is going to be all about is it's going to be about the fundamentals, the technicals, the option pricing, and what are the related equity prices telling us, meaning using the energy complex, looking at your ETNs, your ETF products, what does that tell us about where crude oil is, where it's going to be, where natural gas is, where it's going to be, and where those products, those refining spreads, which will affect the Valeros of the world, the Chevrons of the world. Going to be a great workshop. If you really want to understand this energy market, come over to our website at TFNN. You're going to see it right on the front page. 877-927-6648, Urban Outfitters, URBN. Okay, so evidently we're not buying a lot of clothes. The kids aren't buying a lot of clothes. So Urban Outfitters, they have a lot of retail outlets, including, that's interesting, I didn't know they had Anthropology also, which is, Anthropology is basically a high-end woman's household gift merchandising store. The low in this, well, today it closed at $36.17. She's trading at $34.87 right now, so she's down, what, about $1.70. When you take a look at this chart, what you have is this. She's been bouncing along the bottom being $33.95. She's going to be gunning for that bottom once again. If we put this up on a 10-year, what you're going to see is that at this particular point, we're already inside. This is a false break topside. And watch how this false break came about. We broke topside the January of 2013. On a monthly, you did it with 57 million versus 83. Now, that's a close call because, you know, it's not that bad. But what you had, the 83, by the way, was the high. But as we came down off of that high, and this brings you back to September 30th, then you came down with 129 million. Bottom line, you're back inside the range. Once you're back inside the range, what it puts in play is $32.90. So that's where I suspect she's going to be running to. Let's go to Rich in Orlando. Hey, Rich, what's going on?
Very good, Tom. How about yourself?
Good, man. Thanks for calling. Thanks for holding.
Thank you. MUX. I mean, it looks like it's kind of tested the bottom there at the 216 and the 218.
Let's take a look. You got McEwen Mining, folks, okay? The low for the year is $1.63. The high is $3.74. So,
in April it was 216, and in May it was 218. But it looked like it tested those both today, and ended up at 220. Is that a test of those?
This is what the problem is with MUX. And when I brought this up at the beginning of the program about the XAU and the HUI, folks, what it is, and MUX is set up the same way. It's kind of where we are right now is in no man's land. Okay, so your risk in buying MUX is pretty dramatic right now. I wouldn't buy it. That's the bottom line, because MUX can go to $1.95 to $1.63 very quickly. Versus when I even look at the high, it's like, okay, can it go to 292? Maybe, you know, but it's going to, you know, when this came off that high, it came from 355 to 266 with monster energy on the way down. Do you know what I mean? Mm-hmm. Mm-hmm. So, and I wouldn't be biting right here, because this is how this isn't how all of them are set up, but this is how this little baby is set up. And what has happened is this, as Rich was saying, the test was there. The test on many of these equities is coming in with dramatically lighter volume. There's no doubt about that. But it's like, you know, we know we can get to the lower price, and there's nothing really to stop this, you know, to get into this 195. Now, what has also happened...
There's nothing in between. There's nothing in between.
Exactly. Sure. Exactly. And what has also happened, which, you know, I really don't know the full story, but... I know Rob McEwen and I know Ian. Now, Ian, folks, was Rob's right-hand man for 9 years, and Ian gave his resignation last week. Mm-hmm. You know, that's I don't know why, but it's like, man, okay, you know. So I suspect what it is this. I suspect is that gold companies in general have had a really tough ride the last 3 years. So I was saying to my son, you know, we were talking in the car when I saw this come across my text, and I says, well, we might be, really getting ready for a nice run here because it's hard to tell. I mean, the resignation was that, oh, no, he's just moving on and all this, which is really possible. But I know they're both really bright people. So it's like, does it just come to an end because nothing, who knows? I don't know. That's my point. But in that same context, it's like, okay, let this shake out a little more. Do you know what I mean? And see, is there something that's left over here that it does want to go test that 195 to 163 area, which is possible. All right, it's possible that, listen, Ian might have got a great job proposal. I'm sure he can run a lot of other gold companies because he's been around Rob for 9 years. You know what I mean? It'd be like, so.
Okay. Appreciate that, Tom. Thank you.
Okay, keep your hands in your pockets. That's the bottom line.
That's the best thing.
Yeah, for right now. Okay, man. Have a great one. Have a safe one. The dollar. Let's go take a look at the dollar, folks. So dollar index out here, this is what you have. Dollar is going to do, has just set up a very large ABC structure on the way up. We backed down today with 10,000 contracts. That was backing into 26,000 contracts as well as 44,000. Your 8-point on this is your low, which is 78.93. Your B is 80.40, 78.93. Yeah, so 1.5 gets you 81.5. Yeah, okay. So the way this is set up right now is that, number one, it wants to run for the swing point that was generated on the 4th of April. That swing point's 80.77, which is not a huge move compared to where we are. The way this is set up, however, folks, you can get right up to the high. You get up to 81.50. We haven't been to 81.50 going all the way back to January of this year, but that's where that little baby looks like it wants to go. We're going to take a look at that 10-year bond out here. And what you have with the 10-year, she backed down today with 925,000 contracts going into 2 million contracts. This is she's building cars for the next leg up. 10-year and the 30-year. The yield on the 10-year actually is 2.543. It almost snuck down to 2.5 today, folks. When we woke up this morning at 0600, it was at 2.5001. So it was pretty wild. You sneak under that 2.5, which, by the way, I expect we are going to sneak underneath that level. You're going to see a very quick 2.25, and that is a small number. Bottom line is that that's where it wants to go. We have a question. How do you feel the gold rally with your view on the dollar? Yeah, there's no doubt, right? What you have is this, is that the dollar wants to go higher, and, it's really, I like how the actual physical gold market is set up right now because there's no sellers on the way down. What I don't like is how that XAU and the HUI is set up right now. If you have these metal equities, folks, get your stop in, because something that you want to get your head wrapped around is this, is that if, in fact, the XAU breaks this level here, when we're at 89, you're going to see a 79 XAU in a heartbeat. If the HUI breaks this level, we're at 217, you're going to see a 189 in a heartbeat. That's a big number, I like what happened today, but we know how this gets tricky when you're in no man's land, which, in fact, this is kind of where these are set up right now, so you want to be cognizant of how those are set up. As to the dollar going up and gold going up, I think simultaneously, yes, it can happen. And the real key is going to be there is that how does this S&P correlate with the whole deal? And my take on that is that the S&P still wants to get lower. The gold and dollar want to get higher. Market in general wants to get lower. And more than likely, and bonds want to get higher. But more than likely, the reasons for all of that is going to be the downdraft inside the S&P. This is Tom O'Brien. This is TFNN. You stay right there, folks. We're going to be coming right back. We had the Dow Industrials finished up 20, Nasdaq at 35, S&P's up 7.5. We're going to be right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can't use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Tom O'Brien.
Welcome back, folks. We had Caterpillar down 64 cents. We had ExxonMobil up 13. Oxy was up 25. Big Blue was flat at 187. If we do go over to Big Blue and we take a look at how she's been trading, what you have is this, is that she came down off its high once again. That high that she was trying to test was into the 200 mark. She got to 199.21. She's down at 187. She's back inside the lower range. The lower range, once you get back inside 190, what that is setting up is a run down into a test of its lows once again. And those lows, it still has a high volume low at 172.57. We get a question from one of our Tigers, Mitch from Boston. Netflix. Okay, so check this out. Let's go take a look at Netflix. The question is, can Netflix fill the gap at 200, or is that too far out? Meaning we're at 364. Okay, so what happens, folks, is this. First, I'm going to put this up on a yearly basis and take a look at it. So what you have is this, is that we had a huge gap that was open from, we'll take gap by gap, from January 22nd. That gap was $327 all the way up to $377. The stock traded up to $456. Now, in that context alone, I'm sure all you Tigers and Tigers, if you had it, you would have got rid of it. Why? Because we knew that, listen, once that baby turned, that's where it was heading, for the gap. Well, sure enough, it goes from 456 and goes right into the gap, past the gap, and goes down $150. Goes to $299. So in that context, is 200 too much? No, because we know that Netflix just went down $150 from March 6th to April 28th. So you had two trading months, 42 days. It goes down $150. Okay, big number. So now let's take a look at it and where this $200 gap is. Oh, see this. Oh, this is pretty intense. Okay, so check this out. Wow. Actually, the gap's lower than that. This gap, there's three gaps. So this gap here, there's a gap from April of 2013. The top of the gap is 165. The bottom of the gap is 165. Oh, I see. And then the top of the gap is 209. Okay. No, it can hit 165. Yeah, I can get down to 165. Okay. So now we're at 364. I'll put this on a weekly basis. You get a clearer view of it. So on a weekly, what do we do? Well, a weekly, last time it had any juice on the way up was 317. We just got down to 299. That's what that wanted to do. It's pretty clear what it wanted to do. It had made a high with no volume at 8 million shares. Last time that it was at the 317, it had 51 million shares. We came down, first time we came down with 30 million, and we tested that with 22 million. So you can see it ran out of steam on the first get-go, but it's $150 down at the first place that it had real volume. Now the correlation goes like this. We went up last week with 14 million. You're going into 21. That's like, okay, so you're creating a large ABC structure on the way down. The A point being 450, the B being 300. So you get 160.8 to B. That's a big number. We're at 364. I suspect what you're going to see is that it's going to go try to hit 380 first. At 380, you get a beautiful benchmark there, because at 380, two different things will end up happening. You can benchmark the volume there on a weekly basis. The volume is 30 million. What you'd like to see if you're looking to set up a trade, whether it's in the option market or the equity market, meaning going short, is you'd like to see it test that area, see if you have a failure or if it's successful. So a failure is going to be, it gets above 380, 88, closes underneath it on a weekly, has less than 30 million shares. We only did 3 million shares today, so you'd love to see it hit this week. Okay? You get that, then you get action, man, because then you have the A to B set up, you have the B to C set up, and the C is going to be somewhere around 380, and we said it's $1.50, so you take $1.50 off 380, that's 280, that's 230. That's your number. And 230, I believe it was 206 was the top of that. Bottom line is that that's a 1-to-1 ABC structure on the way down. We know you can do larger than a 1-to-1. You can do a 1-to-1.382, 1-to-1.5, 1-to-1.50, or 1-to-1.618. So that's all on the table. The thing that's going to be amazing is to watch how the S&P rolls over, because the S&P hasn't rolled over yet. You know, the baby was still at highs. I mean, when you look at this, we're at the same place that we were trading 3 months ago. If we go all the way back to March 4th, you're at 187.98, and guess what? 187.52 is the low today. We're at 188.84. What has happened, each and every time we're up here, it keeps getting weaker, weaker, and weaker. It looks to me this time what you have, the first one to fall out of bed was the Index 100, the Russell 2000. They fell out of bed a few months ago. They're down big. In fact, inside those indices, many of those stocks are down 20, 25%. The index itself is down about 9%. It looks to me like the Dow now can't make it all the way back. The S&P is this equity that thus far has not basically rolled. When the S&P rolls, then you're going to see the whole ball of wax rolling. You know, in fact, don't forget, folks, each and every trading day right here at TFNN, we do 9 hours of programming, live programming. You can get all of that program right on your cell phone, tfnn.mobi. If you'd like to get Tiger TV, as well as, of course, the Tiger TV, you get the charts, you get the pictures, as well as the voice and the audio. Just go to tfnn.com on your cell phone. On the right-hand side, you're going to see a little box. Hit that box with devices in it. Our servers will know what type of device you are on. You'll get delivered Tiger TV, which includes the charts and the audio. If we go over to the XLE, the energy market, today, what we have with the XLE, she is at 93.69. She had come down with some juice last week. You know, we'll see. She looks like to me she's just about ready to roll. She hasn't rolled yet. But the XLE is going to be important inside the S&P. The XLF has rolled. The XLF, we're up 11 cents today, but the XLF has rolled. We're at 21.86. As soon as she got back inside 22.16, she wants to go downtown. The biggest structure, weighting structure inside the S&P, and what is holding it up, is information technology. That's 20% of the S&P. This is Tom O'Brien. This is TFNN. You stay right there, folks. We're going to be coming right back. We had the Dow Industrials finish up 20, NASDAQ up 35, S&P's up 6.75. We're going to be right back.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
This is TFNN.
The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day after the market close. Tom takes your phone calls from 4 to 6 p.m. Eastern Standard Time using the data available at that time.
Let's go to Tom in Derry, New Hampshire. Hey, Tom, what's going on?
Mr. O'Brien, how are you today?
I'm doing great, man. How you been?
This is like old timers week. I heard Rick from British Columbia. I'm waiting to hear Greg from Long Island.
I like that. Totally, man. Totally.
By the way, your website, unbelievable. Watching that thing change over the years. You guys are doing a bang-up job. You got great guests. And
well, listen.
Keep up the good work, man.
We appreciate you being out there. We never can do it without all you tigers and tigresses, Tom.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 9 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. So everyone's having a great day, safe day. Let's make it a great night, folks. Let's take a look at one of our quotes. This is by Dan Zatdar. Surround yourself with people who believe you can. Market-wise, let's take a look at it out here. We had the Dow up 20, NASDAQ up 35, S&P's up 7.5. Gold contract flat at $1,293 an ounce. Now, we have a gold as this, folks. We are right on a cusp here, and the cusp that we're on is the downdraft that was created in April when gold went from a price point of $1,328 down to $1,284. That was on April 15th. We're building cars to get through that. We got to higher price today. It didn't hold price. Volume wasn't bad, 104,000 contracts. I suspect we're going to build a little bit more cars, and we're going to make that run for that 1328. Where the divergence is, well, it is in the XAU and the HUI. The XAU, the HUI right now, they both did reject lower price today, just barely. Okay, these levels here, we want to basically, I want to see the XAU and the HUI. Not that I own those, but we own a few silver equities. I want to see those babies hold right here, the XAU and the HUI. The reason being, if you break these levels of the XAU, the HUI, they'll take the good babies, the bad babies, everything will get flushed down the toilet ASAP. I do like how a couple of these gold equities traded out here today. The large gold equities are history. Newmont Mining is history. I mean, Newmont, big problems. We're at $23 out here. Newmont has a high volume low out there at 21. She has another expansion of volume again today. She did 8.4 million. She's going into 9 million. It's really intriguing watching the monster companies. Barrick just went from $22, $21.56 down to $16.56. She's going to test her low too, which is a $15.26. So the divergence is out there, but this is going to be really an important week inside that market. We're going to take a look at silver. What we have with silver is this. Silver's trading out here at $19.34. We did 33,000 contracts. Silver is set up for higher price. What happens is that when I'm looking at the silver market, well, look at the metals market in general, okay? When I look at it, it's like, okay, silver is basically saying it wants higher price, already rejected the lows quite a few times, has a few different signs of strength, and in fact, even today, it was basically stronger than the gold market, even though both of them did not hold their highs. You know, bottom line is that it looks to me that those two are going to be going forward. Now, inside the dollar, what you have is this, is that the dollar index has set up a small ABC structure on the way up. So that structure, you know, is saying, hey, guess what? The dollar wants to go to 81.60. You're only at 80.04. So that correlation is, in fact, can gold go up and silver go up and the dollar go up? We've had them both rise twice in the past, but it is unusual. There's no two ways about that. Bonds. We take a look at that bond market out here. Let's go to oil first. What you have with oil is this. She traded to 103.09 today. She closed at 102.63. She's right into ICE, and it looks to me like, bottom line, 102.60. Oh, this is beautiful. Yeah, she failed. So this is a close call, but she failed. Okay, we did 78,000 contracts. You're going into 324,000 contracts. That is sweet, folks. You closed, you got over the high that was generated last week, which was the 102.65. We had 223,000 contracts there, and we did 78,000 today. That is something that, let me just pull up. I want to make sure that I'm on the right contract here. Yeah, I'm on the right contract. Because what happens at the oil market, folks, it's every month. Bottom line, yeah, you get a failure out here in oil. Bonds, different ball game. Bonds backed down, the 10-year backed down a couple ticks, the 30-year backed down 15 ticks. In both cases, folks, that bond market wants dramatically higher price. The yield today inside the 10-year almost got under 2.5, was 2.501. Right now at 2.545. That yield wants to run down to that 2.25. We'll see, in fact, how much lower it can go. When I look at the 30-year, what you have with the 30-year, right now we are trading out here at the 136. The 30-year wants to run to 141. As I said a lot earlier, many times, is that the 141 is only running up to ICE, which is, you know, a normal bounce after you've had a downdraft. You know, the bond market topped out, folks, in May and July of 2012. The thing that's amazing, it still blows my mind how quick time goes. I mean, we're going to be approaching June. So 2 years, you know, from July, of course, is that we very well might be in the same range. Something to keep your head wrapped around. If we get back inside, you know, the 141 is where it wants to go right now. But if you get back inside 142, like 20, inside the bonds, yeah, you're going for the highs. That's the higher range. If we, you know, so the bond market, bottom line, wants to go higher. And what we have on a fundamental basis, folks, is this. On a fundamental basis, there's less bonds in supply from our own Treasury, and there's more demand. That's what's going on. You know, I know it sounds like the deficit will never go down, but guess what? It's going down. And when the deficit goes down, folks, it goes down very quickly. You know, and where's that money coming from? That money is coming from the tax base that's coming in, and taxes pile up very quickly because our economy is so huge. 877-927-6648. After the close out here, you had Urban Outfitters. They come out with numbers. Urban closed at 36.17. She's trading at 34.60 right now, and this is how the numbers are. You have the sales were up 6%. The earnings per share was 26 cents, and I don't like something in here. Okay, so the top line, the estimate was 680 million top line. They came in at 686. They missed by a penny. The estimate was 27 cents. They did 26 cents. When we take a look at the actual chart, it's not good. Right now, this has been building cause to break out its lows. This has been trading, you know, you came off that high of 44. You're at 36. You have a high volume low at 33.95, and that's what it's going to go for. It can actually get back to 30.91. 30.91 would be where it went topside in August of 2012. That's how this is set up. What you do have, and this is where you can get a great lesson as to when you get back inside ranges, what ends up happening. When you can't bust them up, you bust them down. You're back inside that range, and, you know, bottom line, $29 is game. That's how this baby is set up at this particular point, and that's going to be game on the downward side. Some of the high volume stocks we had out here in a low volume market out here today. We had BAC, Bank of America up 16. DirecTV was down $1.52. You got Marvell wanting to buy DirecTV. Intel was up 22. We had, let's take a look at some of the Dow stocks. We had ExxonMobil was up 13. We had Oxy up 25. Big Blue was flat at 187. Big Blue wants lower price. JP Morgan, let's go take a look at JP Morgan. That is a large, strong bank, of course, that has come down with some real juice. You know, with JP Morgan going south, JPM. I expect what you're going to see is the rest of that banking structure is going to also be going south. J.P. Morgan is off the high of 61. You're at 53. You got a bounce today of 12 million shares versus going downtown 25 million. This is not over yet for the downside for J.P. Morgan. She is making her way. She wants to basically come down and test out these lower levels at 51, and right now we're at 53. We have the Dow Industrials finish up 29. It's up 35. S&P's up 7. You stay right there, folks. We'll be coming back with our Tigress, Amy Smith from IBD. We're going to be right back.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We had the Dow finish up 20, Nasdaq up 35, S&P's up 7. As we do each and every Monday at 20 past the second hour, we have our Tigress, Amy Smith from IBD. And, folks, if you haven't test drove either Investors Business Daily, the print edition, or Investors.com, the digital edition, come over to our website at TFNN. You're going to see the banner, Investors.com banner on the right-hand side. Hit that banner, get 2 weeks absolutely free. And you can either get the newspaper delivered to your house for 2 weeks, or you can be on the website using all the great educational tools that they have at investors.com. Amy Smith, what's going on?
Hey, everything's just great. How's everything in Florida? We finally cooled down. We're not quite as hot out here.
Thank God. I was thinking about you. You know, when you gave us the heads up last week, how dramatic it was, and then we saw all the fires, I was saying, oh, my God. I mean, it's just amazing that the heat can be that intense, that quick in the summer. I mean, it's early, you know?
Well, it almost looked like there were a couple down in San Diego, and the fires almost looked like little tornadoes. I don't know if you saw that on the news. It was really crazy. Fortunately, they got most of those out under control,
yes.
and we have cooled down. I mean, it's dramatic. It's a lot cooler here today, which is nice.
No, that's great. Listen, we've never had such a great winter in Florida. I mean, going to work today, Amy, it's 78 degrees. And there's no humidity.
Oh, how nice!
Isn't it crazy? It's May.
Nice. Someone has to do it, so we might as well let you guys be here.
Yeah, might as well be us. I know. So, what do we have? What's our current take on the marketplace?
Well, you know, it's funny. I can't say that the market looks awful. We are officially still in a correction because we haven't had, what we call a follow-through day yet, but there's not a lot of economic news this week. It's going to be kind of a quiet week on the economy.
Yes.
The first quarter earnings are slowing. Now, China's market was under pressure today as data showed they had a third straight quarter of slowing price growth for their new homes in their country.
Okay.
So there's a little concern about, the growth over there. We had a little bit of concern here. We got two big retailers, Walmart and Kohl's, last week. They both really reported not terrific earnings, so we were worrying about the consumers going to continue to spend, so there was a little bit of concern there, a little bit of slowing from manufacturing in April. Today we were modestly higher. It's kind of a blah market.
Yeah. I saw in the IPO market, I saw that the beauty products Chinese retailer, right?
Yes, it is. This is a funny one. It's called Jumei. And the ticker symbol is JMEI. And I tell you what, we had 7 companies come public last week, and the Chinese one, this came public on Friday, is the largest one.
Yeah.
And I think it could be an interesting one for everyone to watch. This is China's largest online retailer of beauty products. Now, why that's interesting is because China's middle class is growing, and they have 617 million people that use the Internet in China, which is doubled our market in the U.S. That's just a huge amount of people using the Internet. This Jumei site, they have beauty products. They're the biggest one in China, and
yes.
They have 10 million active users.
Well, and, of course, you being a woman, you know that beauty products are expensive.
Yeah.
There's a large markup. And, what was interesting is that last week, folks, okay, most of the IPOs that have come off the last couple of weeks just haven't had any traction whatsoever. And this one did get traction. Now, it didn't hold the traction,
but
the baby got up to 28, and I was looking at that, I says, and just in the context of beauty products, period, it's a nice business because it's a clean business. The markup is huge, and I said, what I didn't realize is that it was a Chinese company. I was, and I meant to go look, so I'm glad you sent this over because it was like, okay, man, because that was the only IPO that had got any traction last week, too.
It is. It's the only one that really took off, and as you say, it did pull back today, so it gave back 4 points or so here today. But I still think it's one to watch. The CEO's name is Leo Chen, and he received his MBA from Stanford in 2009. And I'll tell you what, these guys that come over here, they go to the Ivy Leagues, they go to Stanford. They get their MBAs and they go back to their countries.
Yeah.
So they have a very strong management team because I looked up all the other managers that are senior managers. And they say that Jumei.com has the most visited online beauty products website in China. Now, if you think about Ulta Beauty, that was one that did very well in the market, right? A lot of women go in there.
Yep.
And these cosmetics and these beauty products it's a big, big deal to women. So I think it's one to watch.
I agree. There's no doubt. And what happens with this one, by the way, folks, okay, so it's at $23.75 right now. They went out the door at $22. So that's always cool to understand. You know what I mean? It's not having a jump on, but it's something you do want to keep on your radar. There's no doubt about that.
And I'm looking at their earnings. They've got, 3/4 of some pretty solid earnings numbers here. So it's also not a thin stock, which I like. It's a newer IPO. The average daily volume right now, it hasn't established an average daily volume because it hasn't been trading long enough. But if you go by the power that went into it the first day, it was 3 million. So they had a lot of investors jumping on board the first day, which is that's also positive.
Yeah, and we had 1.2 million today.
Yeah.
That's that's something you can get your head wrapped around, no doubt.
Yes.
Pretty cool.
Now, one that did not do as well, but I still think this is an interesting story. Some of these don't work out. This is called True Car, and the ticker symbol is TRUE. The reason this one has an interesting concept is, when was the last time you had to go dicker around and try to buy a car or lease a car? It's a hassle, isn't it?
No, you talk about, and they have more fees on there, and I think, I know, buying a car is an emotional decision.
Sure.
So if you're walking in there, because I walked, last time I walked in a floor of a car thing, I had them open up the doors and take out the car on the floor. So I know, I mean, I'm the worst person to sell something to. I'm probably the best person to sell something to because I just made an emotional decision. I'll take that one right there. So it was like, and once I made the decision, and they know that, and the price matters, but it really doesn't matter that much. So I tried to do as much work as I could before I went in there, but guess what? It all went out the window.
One of the guys that I do another radio interview with wanted a BMW. His wife wanted a BMW. So he, no matter what it was, the added cost for this, and he was going to pay it because he wanted to get a BMW. What this company's trying to do is they're trying to get all of your upfront pricing data on new and used cars. There's no more of these hidden fees. We got an extra tax for this or that.
Right.
And they're hoping to change the way the dealers, attract customers and sell cars. Now, it remains to be seen whether they can do this or not, but I think the concept's kind of interesting. Oh,
the concept is great. There's no doubt about it. Yeah.
Now, we have another one here, Rice Energy. And I think you'll like the chart on this one if you take a look at it. It's RICE, Rice. And this one's looking nice and solid. Look at the tight trading on the chart. It's setting up. It's shown up on our IPO leaders screen that we have Tuesdays and Thursdays. The reason this is a good one to keep watching, it's a shale oil and natural gas explorer. Of course, this has been all over what we've been looking at.
Oh, yeah.
They operate in the Appalachian Basin in southwestern Pennsylvania.
Okay.
Look at this. It's made a 45% gain since its January IPO price.
Nice.
Yeah.
Listen, folks, come over to our website at TFNN. You'll see an investor.com banner right on the right-hand side. Hit that banner. You get your 2 weeks, either print edition or digital edition right now. Amy Smith, you have a great week, safe week. We look forward to speaking and right back here next Monday.
Oh, thank you, Tom. You have a good week, too.
Thank you. You stay right there, folks. We'll come right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foresight Fund Services, LLC.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We had the Dow finish up 20, Nasdaq up 35, S&P's up 7.5. And as we do each and every Monday at 35 past the second hour, we have our man, Mr. Noth Van Hooser. Noth, folks, does the best option show on the planet. It's broadcast right here every Tuesday, 12 to 1 Eastern Standard Time. It's sponsored by TD Ameritrade, Think or Swim. And remember, you can get all the programming at TFNN right on your cell phone. All you do is you put TFNN.mobi. You can get the audio. If you want to get the video as long with the audio, just go to TFNN.com. Hit the little box on the right-hand side. You'll be able to bring it up. You'll get the charts. You'll get the pictures. You'll get the audio simultaneously. Now, as you're over at TFNN, if you haven't used the Thinkorswim platform by TD Ameritrade yet, test it out. I use it each and every day, and it doesn't matter whether, well, on one platform, folks, you have currencies, you have equities, you have options, and you have futures. So you only need one platform for all of that. Outstanding platform. You can come over, open the platform up, and use paper money so you can see how these strategies that North goes through each and every Tuesday, how they work. And it's a great place to basically use the strategies, test drive it, and see how your strategies work out. What's going on, North?
Not much, man. How's it going?
It's going good. I know as the market has been going up and down, so hasn't the temperature in Chicago.
Well,
you got to tell them this, folks. You're just not going to believe this. I mean, what, it was like 85, and then it was snowing, right?
Yeah, it snowed just a few days ago again, and it's been a dramatic temperature change over the last few days, just in the last week.
Yeah,
but it's like 71 right now. So
perfect. No, you're back in it. But you know what happened is that when I saw that, I saw that you got that beautiful day like last week. It was just gorgeous out, right? And then I was just checking it, like I think Tuesday or Wednesday, and I said, "Oh my God, it's snowing there." It's like, you got to be kidding me, man. I mean,
yeah, I know. I don't know what to make of it because I'm from Texas.
I know.
So,
believe me.
It's been a wild ride. The worst winter in like 30 years or something like that.
Yeah. Well, hopefully you're going to have a great spring and summer now. So, when we look at the market, I mean, the small caps basically, weak. The NASDAQ, weak. But the S&P, man, is hanging up here.
Sure is. S&P and the Dow are holding their own above the 50-day moving average, of course, way above the 200. And they just don't look like they want to go down right now. I mean, it's been kind of consolidating, right? Over the last couple of months, we've got some consolidation and everything. But as far as, it's hard to say, right? I mean, I think we're kind of in wait mode. Couple different reasons. You've got Wednesday, you got the FOMC minutes, right?
Okay, yes.
So we're going to be in neutral until at least Wednesday.
Right.
When and that is going to be, exactly what happened at the meeting, and that's going to give people an indication of what to expect. And Janet Yellen, or should I say Chairman Yellen?
Yes.
Anyway,
whatever.
She's going to be doing a speech on Wednesday as well. So we got a lot going on this week that is going to give people an indication of what's going to happen in the future.
Yeah. No doubt, because it is amazing. It's very unusual, folks, when the small caps can get hammered so dramatically, and the S&P and Dow are still at highs.
And if you check out Russell, RUT.
Yes.
As far as it's had a good bounce. It looks like it might hit some resistance. The 50-day moving average. But you're right. It fell apart, and it's trying to get back in line, but. The only time is going to really tell that whether it can get back above that 50-day moving average like the S&P and the Dow. Yeah,
and that is amazing too, because the Russell folks is at 1114 right now, and it has to really get up there. That 1147 is just trying to get it up into that. So that's a big move. The last bounce, it only could get to 1136. So. Yeah, my longer-term take is that the S&P is going to fall apart, but it's going to be interesting to see, and it hasn't yet. I mean, and I look at that weighting structure, and it's like, information technology is 20% of it. It looks like the financials, they start rolling somewhat, and that's the second largest weighting, but that information technology doesn't want to roll just yet.
Yeah, I mean, you've got a lot of these social media companies that have, taken it on the chin in terms of correction recently. But you've got some of these other big names that, people are saying, well, they haven't moved. Well, they haven't gone down either, so they haven't doubled in price like these Twitters, Facebooks and everything over the, a few months ago, what was Twitter at 72 or something like that?
Yes.
I'd have to look it up, but my point is the bigger names, the older names in tech just haven't fallen apart. But they didn't double in value. So, I mean, they're kind of stable. But I see what you're saying with regard to, you're going to need more components, more sub indices fall apart before you get the SPX to roll over.
Yeah, no doubt. Listen, folks, every Tuesday right here, TFNN. So tomorrow, mark your calendar, put it on your cell phone, put that alarm on your cell phone. It's 12 noon Eastern Time, 12 to 1. North does a great job showing you the different strategies, showing you how the TD Ameritrade Thinkorswim platform works. It's an amazing platform. It's clean, it's fast, it's reliable on a 24-hour basis, which is just absolutely dynamite. Well, listen, man, you have a great night, safe night. We look forward to the program tomorrow, and I know that spring has finally sprung, and being in the probability business, I think I'd probably take a bet now that it's not going to snow anymore since you got that last snowstorm Wednesday.
Well, that's an easy bet.
Oh, man, I'm telling you.
All right, sir. Well, you take care.
Okay, North. Have a great one, man. Have a safe one. And we talk about, probabilities, folks. It's going to be interesting watching the Belmont, okay, because, that horse race, the bottom line is that we actually get some action here. We very well may have, we'll find out whether the first time since, I believe, 1978 that we may get a Triple Crown winner. And what you did have out here today, which was great, is that the horse itself wears nasal strips, as football players do. And prior to this morning, the New York Racing Commission basically hadn't allowed them. And not that there's anything wrong with them. Well, they opened that whole thing up today, and they basically, thank God they acted on it quickly. Because horse racing does need, no doubt, a couple big winners. So what I expect we will see is that when I think it's in a couple of weeks, that's going to be a big audience. There's no doubt about it. 877-927-6648. As North just said, it's going to be interesting. So we have the Fed minutes that are going to be coming out. And inside those Fed minutes, folks, what I expect you're going to see, it's going to be carte blanche. It's going to be status quo, rather. And that status quo, has to do with buying or not, basically bringing the level of bonds down that they're buying. But something that you want to wrap your head around, and this is a big deal, is that there's been less bonds that are floated out. So as to, I haven't done the actual number as to the percentage, but I suspect the percentage of their buying probably is the same and very well could be bigger, because the 10-year, the 3 and the 5-year notes that were put out the last month inside the Treasury have gone down dramatically because the government doesn't need the money. That's what's going on, just so you know that, okay? Now, we'll see whether that trend continues. But when that does happen, that is what's putting demand inside the bond market, because what you have by prospectus and many of these larger, whether they're pension funds, whether they're state funds, educational funds, what ends up happening is that out of a portfolio, those large sovereign funds, state funds, government funds have to buy also short-term paper. And the reason that they use short-term paper is that they use certain amounts of money out of their balance sheet to basically pay bills going forward. So there's certain amounts of money, we're talking about all these funds have billions of dollars. There's certain amounts of money that, yes, they can use for higher risk investments. There's a certain amount of money for conservative investments. And then there's a certain amount of money that they have to keep inside treasuries specifically in order to basically pay bills that are due in the future. And that is basically putting demand squeeze inside the bond market. You hear, just over and over again outside that this is a short squeeze in the bond market. It's not a short squeeze, folks, okay? A short squeeze is specifically that traders are going after bonds because they know people are short. This is people buying bonds because they have to have the bonds in the portfolio, flat out. That's it. End of story. You stay right there, folks. We'll come right back. The Dow Industrial's up 20, Nasdaq up 35, S&Ps are up 7.5. We're going to be right back.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Tom O'Brien.
Welcome back, folks. We had the Dow finish up 20, NASDAQ up 35, and Credit Suisse. They just this just came across the tape. They just pled guilty, and it's already basically a deal that they're going to come up with a bunch of money. But it was a criminal. It's the first time a bank is pleading guilty to basically criminal offense. Credit Suisse representatives appeared in Virginia federal court to plead guilty on behalf of the Swiss firms to helping Americans cheat on their taxes, make it the first time in more than a decade to admit to a crime in the U.S. The prosecution marks the toughest standards by the Justice Department. They're going to pay $2.5 billion, and $715 million of that will go to the New York Department of Financial Services. They're making some money, man. Bottom line is that what the bank had done is pretty amazing when you think about it. Okay, so they help people cheat on their taxes, but then the way that they got the money back to the folks, the bank helped clients withdraw money from accounts by providing hand-delivered cash or using Credit Suisse's correspondent bank accounts in the U.S., the government said. The bank structured such transaction in a way that would evade currency reporting requirements according to the filing. Pretty intense. They're not allegations anymore because they pled guilty to them. Let's go to Rob in Paramus. Hey, Rob, what's going on?
Hey, Tom, how you doing?
I'm doing great, man. You having a good day?
Yeah. I had a question. Do you think Visa or Gilead, G-I-L-D, are good shorts now, or would you wait?
Let's take a look. We'll start with Gilead. Gilead, folks, is a huge drug company. The low is 46. The high is 84. You're trading at 82.05 right now. And what he's looking at is that it's almost made a 100% move coming back to the highs. And we do have a high volume down level at 63, which is beautiful. Let me just put this on a 2-year. Okay, so your first high was generated out there. Okay, so 80. Well, first off, I'd let this go test the high because it's going to now, because the high, the bottom of that high, Rob, was 81.80, and right now we're at 82.05. So more than likely, it's going to try to spike that high this week. We did 52 million shares. Yeah, you got to let this play out because we've done 10 million today. So I'd let it play out. You want to test. If you get a test of that level and it fails, so a failure would be you get over the 84, 85. You do, let's say we did 52 million there. You'd love to see something like 42 million, 45 million. 42 would be better, okay? You get a failure there, then yes. Then that would want to basically pull back to 73 to 63. Now, it wants to pull back there anyway. The key is that is it going to bust over this high first before it does it? Because when this came down from the price point of 84 to 70 to 63, like in 5 weeks, that has real volume there, man. And longer term, this thing is saying it wants to go to 37? Yeah. Longer term, it's saying it wants to go a lot lower. If we take a look at Visa, so Visa right now is trading at 210. Yeah, she has a high volume low too. This might be a better trade though. Let's take a look at this. Okay, so 194. Interesting. So 194 stopped this in its tracks. Now I guess the Gilead's a better trade. This is why. When Visa just came down off 235, folks, or 210. We hit 194. 194 was going into 194 going back to August. That was 51 million shares. We come down there. We hit it with 32 million. So now you're going to get a little consolidation, but it looks to me like a bottom of the floor there is at 194 level, where when you go back to Gilead and you take a look at it, this come down hard, number one. When you put it on a monthly basis, yeah, monthly basis is sweet. You got to watch. On a monthly basis, you made a high with 226 million. It came down at 472. And this has a long way to go down, man. Yeah, so I just let it test the high. You got to test the high with lighter volume, you get some real action. If we go over to the IBB, which took, by the way, Gilead, Biogen, they took the IBB south. That's trading at 231 right now. Ooh, interesting, and there's no juice at all in this. Wow. Yeah, I'd stick with that Gilead, man. I think you got something really good there, man.
Okay, thanks very much.
Okay, man, have a great one. Have a safe one. Thanks. So when you go over to the IBB, folks, so this is what started the downdraft, by the way. This was the first sector that went south. And when this sector went south, it took the NDX 100 with it. It went from 275. It had topped out February 25th from 285. Yeah, 275 straight down to 207. Okay. This is pretty sweet. My man Dave White is telling me that we have confluence at the 233 to 235 level. Now, if you have the out of time of the trade charts, folks, just hit that, basically IBB and put the confluence up there, because that is crucial to understand. That's where it is number one, and it's up at this level with zero volume. Today we did 900,000. You're going into 5.5 million. Man, that's intense. Yeah, this thing's not going to. This thing's not going anywhere. Now, inside of the IBB, the structure. Let's look at this weighting structure. Oh, look at this too. Oh, this is cool. The only thing that's holding this up right now is Gilead. So Gilead, not the only thing, but Gilead's the largest weighting. Gilead's 9%. So you can see. So check this out. You can see that Gilead's up there its highs. It's the largest weighting inside the IBB, but the IBB can't go anywhere. It hasn't gone anywhere. Celgene is 8.4. Amgen is 8.3. This is the weighting structure we're talking about. Biogen is 7.9. Alexa Pharmaceutical 7.2. Let's bring CELG. Let me bring up a few more of them. And what does happen, folks, and I've seen this many times, Celgene's not going anywhere either. What has happened is this. When you have extraordinary runs like we have had in the marketplace, it is the biotechs that always seem to be the last sector that move, and they move dramatically higher. And that's exactly what we had when we take a look at the IBB. And the IBB, by the way, are the biotechs that make a huge amount of money. There were plenty of biotechs that ran with the IBB that already are smoked. The IBB went straight from $90 in September of 2011, and without looking back, all the way up to 270. Now we come off that high with volume. IBB is going south. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it. Take ownership of it and fly with it. Thanks for being here, folks. Have a great night, safe night. Look forward to speaking to you right here tomorrow. Real! Go get them, folks.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
This is TFNN.